Hello everybody, this is Toni Turner and welcome to the Market Now as of the market's close on Friday, October the 12th. Well, Wall Street finally closed higher today after its worst two-day slide in 8 months, and the market remains fragile with nearly 3/4 of the S&P 500's components in correction territory or worse. Following this past Wednesday and Thursday's 5% rout on the S&P 500, the leading benchmark index, the S&P 500, is down nearly 7% from its record high close on September 20th. And on that cheerful note, let's go on and look at 3 charts that could give us some insight into, hopefully, a more cheerful week to come. Okay, as we always do, we're going to take a look now at our daily chart of the S&P 500 Spyder, symbol SPY. As you all know, this is the ETF that closely follows our S&P 500 benchmark index. As I just said, the SPY dropped dramatically this Wednesday and Thursday. And today, it's white knuckling at the close. It's white knuckling the 200-day moving average that is now coming in at 276.29. The S&P Spyder closed today at 275.95, just as you see, just a few cents below the 200-day moving average. So it's good it closed at least near that. Now, where it closed today at 275.59, I'm sorry, 275.95. That's about 27.59 on the S&P 500 itself. Now, we remember the last couple of weeks been looking at the RSI, the 14-day RSI, and we see here that it was getting weaker ever since about the middle of September, when the market made this high on September 20th. Of course, the SPY made an all-time closing high at $293.58. So since then, the RSI was making a lower high, just as the SPY made a lower high. That was kind of a warning here that things were getting tired, and then the SPY rolled over the next few days and hit the 50-day moving average and then closed below it. When we get more than one close below the 50-day moving average, we really need to start paying attention here. And of course, that's exactly the indication that it gave, that we needed to pay attention, and the market dropped again dramatically Wednesday and Thursday. So we did talk about in the last few weeks the RSI being in a bearish divergence, meaning it was heading lower while price was at least moving sideways up here. We also talked a little bit about the MACD, the moving average convergence divergence oscillator, with the signal line below, excuse me, the MACD line. And that, of course, ended up being a pretty accurate signal, although no one, I suspect, thought the drop-off was going to be quite so dramatic. Now, the SPY has potential support now at Thursday's low, which came in at about 270. We also have more price support coming in here, if I could draw a straight line, at about 269. So this is pretty good potential support right here. Now we want to keep an eye on the SPY in the coming week. Of course, we're in earnings season. We're in third quarter earnings season, and that will have a lot to do with which way the SPY goes, the S&P 500 index. Now, again, it closed right here at the 200-day moving average, and I'm going to be happy here to stay on the sidelines through the first few days of the start of the week. Can this be a V-shaped reversal? Can it come all the way back up? That might be a tough act to do, but think of it, we're coming in again to third quarter earnings season, and a lot of the way the SPY moves will depend upon the earnings reports and, possibly more important, the guidance that these companies give, especially the big momentum companies. So we're in a place here we've needed to take a rest for quite some time. I think I talked about this through August, through September. I sincerely believed the market would make a rest stop before then, but it went so high for so long. When it needed to rest, it did so again in quite a dramatic way. So I'm not totally anxious here to jump in until I see which way the market's going to go. When you get a move like this that breaks through a lot of technical support and you add third quarter earnings season on top of it, I suspect we're going to have a bumpy ride here into the next 3 weeks that will make up the biggest part of earnings season. So please remember, cash is a position. You may want to stay on the sidelines a little bit. And if I see an opportunity that looks like it may have legs, that it may work out, I still will enter with only small share size and certainly with very firm stops. And now let's go on to our next chart. This is a chart of the Powershares Qqq. As you all know, the Powershares Qqq follows the NASDAQ 100 index, an important index in the market. Now the QQQ, as you all may remember, made a new all-time closing high on August 29th at $186.74. Then, just like the SPY, it made a lower high in the first part of October, and neither one of these indexes could get the energy to continue the uptrend they were in, make a higher high again. They couldn't do it. And then that was kind of a warning to us, a very shallow little double top here, but it certainly played out dramatically when it got going. And a week before last, the QQQ, like the SPY, fell down, hit its 50-day moving average, and then, as we know, continued south. And so this was Wednesday, this was Thursday. The Qs bounced up a little faster than the SPY did. When I captured this chart today, the QQQ, well, at the close, it was trading at $174.32. We want to look here at the low here. Thursday's low was right down at 168. So that should provide potential support for the QQQ if it cannot continue higher in the coming week or weeks. However, again, could we expect a V-shaped recovery here? Some of these big momentum stocks will have buying coming into them, but please remember, again, they're all going through earnings season now, and that could add quite a bit of volatility to this market. So I don't look, it could happen, and I hope I'm wrong, but I don't look for a smooth run right back up to where the QQQ was, back up to its highs. Up at 186. That would be a tough road to go in the middle of earnings season. But still, it will be interesting here to see if the Qs can remain above their 200 or its 200-day moving average, coming in now at $171.56. If it can remain above that line, possibly even build a little base here, then it could possibly have some legs, as we say, when earnings season gets through, and possibly it could start back up. Please remember that November, December, and January are typically the 3 strongest months in the market, so we do have that to look forward to. Again, cash is a position, and if you would like to stay on the sidelines for a few days, I don't blame you at all. And again, any new positions I will add will be small share size, very firm stops. Our final chart today is one we haven't looked at in a while. It's the VanEck Vectors Pharmaceutical ETF, symbol PPH. The top components in the PPH are AstraZeneca, Pfizer, Sanofi, Bristol Myers, and GlaxoSmithKline. Now, the PPH has done very well this year. It's come up from its April lows, actually made a double bottom back here in March and April, moved up above the 50-day moving average, and has pretty much walked up this line until this week when, again, Wednesday and Thursday were a tough go. Now, it made a closing high on September 20th at 64.49. This was the closing high here, the tallest closing high at any rate. Then it did roll over. It came down again to close today at $61.23, gapping up this morning, and again starting up just as the SPY and the QQQ did. The 200-day moving average comes in here at $60.15. Currently, like the indexes and many ETFs and stocks, the PPH is trading down here in oversold territory on the 14-day RSI. So this could mean we get a little bounce here. I'm going to keep an eye in the coming week on the PPH. I'm going to see if it can get strength coming in here. Again, the 200-day moving average is coming in at $60.15. If it can stay above the 200-day line as we move through the week, I may add shares of the PPH to my portfolio. My initial protective stop is going to be a close below the 200-day moving average. Now, if in the coming week the PPH starts moving lower, I won't add shares. I'll just, excuse me, keep an eye on it. And of course, if it closes for 3 consecutive closes below the 200-day line, I'll look somewhere else. But I'm going to keep an eye on it, see if it can start building a base here. And if the market remains a little bit strong and the PPH starts moving up higher, perhaps 61.50 or so, again, I may add shares to my portfolio with that stop as a close below the 200-day moving average. If I get in and it starts higher, I will put a trailing stop on it very quickly. I am not interested in taking any losses from the volatility that we may see. So it's something you may want to keep an eye on in the coming week. And now for this week's economic reports. But first, please join us this coming Monday, October 15th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. We have a good time. For those who cannot attend our live session, it's not a problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. And now for this week's economic reports. Monday we have Empire Manufacturing. Tuesday, not much going on economic reports. Wednesday, we have building permits, housing starts, and our usual crude inventories. On Thursday, we have jobless claims, the Philadelphia Fed, and our usual nat gas inventories. And on Friday, we have existing home sales. Of course, as you know, we are now going to be in the thick of earnings season for the next 3 weeks. So companies, hundreds of companies, will be announcing their earnings throughout the day before and after the bell, and please know that the big generals, the big momentum stocks, those will definitely move the market, so you might want to stay tuned to some of those. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.